Right, here's going to be a very quick lesson in terms of just market structure, liquidity, and all the other things that ultimately we, we need to find in terms of understanding what the market's doing, what the market's trying to tell us, right? So, in simple terms, we clearly had this high up here, right? Now, I've done several videos on, the liquidity grabs, the liquidity runs, the sweeps, and all of this comes back to the Dow theory, right? So again, I've done some videos on Dow theory. I've done some posts in TradingView on Dow theory. If you don't know, what it is, it's basically 6 principles, right? And a lot of the technical analysis that we see and use today can actually be kind of attributed really to these core principles. So, first of all, the market discounts everything, right? This is principle number 1. Now, what I mean by this and what Dow meant by this was ultimately you don't really need to take into account things like the news, right? The prices have all been baked in, priced in. We saw that especially with the ETFs when it comes to Bitcoin, right? The price had already been priced in. We weren't going to 100K. We had the rally before we actually had the approval, right? The second thing then is the market has 3 types of trends, right? Now, if you think of Elliott wave and you think of multiple time frames, what you're going to see is in an uptrending market, right? You're going to be looking for moves that look something like this, right? You're going to be looking for a 1 pullback 2, accelerated 3, flat-ish 4, move up 5, right? And you're going to see that inside of a larger move 0 to 1, right? It's going to be the inverse. It's going to be an ABC on the move down, right? But in theory, if you understand that the market is moving up, right? Now, this is where the third principle comes into play. The third principle, right, is the primary trends have 3 phases: an accumulation, a mark up, and a mark down, right? As well as a distribution. Right? So then you'd have a distribution markdown, you'd have an accumulation markup, right? Now, the markup and the markdown are regarded kind of the same thing, right? They just the movement in the market. So going back to the second principle, right? Inside of these areas, you're going to have an accumulation of sorts. You're going to have a mark up followed by a distribution, followed by a mark down, followed by an accumulation, okay, and so on, so on, so on. Now, obviously, the third trend, right? So let's just say we talk about the white line being a daily. We can talk about the orange being, say, a 4-hour, right? And then we want to be looking at, say, a 1-hour inside of these moves, which means you're going to get a similar type of pattern: a 1, 2, a 3, 4, and a 5, right? This is where Elliott wave and everything else kind of comes together, right? This is Wyckoff, Elliott, and all these kind of, other types of terms, smart money, all the kind of stuff that you guys would be used to hearing. Now, the fourth principle is indices must confirm each other, right? Now, this is almost like extra confirmation. Now, in terms of the indices, if you've got something like the Dow Jones going up and you've got SPX going down, then obviously there's a bit of a difference or discrepancy in that movement. So for the trend to be trending in the overall sense, you want to be seeing, indices kind of pointing in the same direction. It doesn't have to be all of them. It just needs to be a kind of the sentiment pointing in one direction, for a similar bias. Okay. Now, I know this is slightly different when you're looking at things like Bitcoin, but again, the general sense is if you've got those indices moving in your favor, then ultimately expect to move up, right? If they're obviously going down and they're falling down kind of collectively, then you want to be looking at, potential pullback moves overall. The fifth principle is volume must confirm the trend. So again, if you don't really have much volume, right? If we've got a move that's ultimately rallied on up and it's kind of, depleting volume, then we're almost out of steam, right? What you want to be seeing is when you take old all-time highs, right? Now, if the old all-time high was 69K for Bitcoin, you want to be seeing momentum. You want to be seeing stop losses being triggered, right? From the shorts. You want to be seeing new orders being added So you want to see volume increasing, right? Although the price is going up, right? This is a little bit of a double-edged sword. Although the price is going up, you need to see the logic and understand the rationale, as in what's driving those prices up, right? And at the moment, this is where a lot of people kind of fall down, fall over, right? So the final one is the trend is basically your friend until the end, right? Now, what I want to do is just touch on kind of all of this into the liquidity type model, right? And just understand. So what I've done, I'm just putting this on because I actually had the delivery yesterday of my new book, right? This obviously is out in less than a week now, and it was actually really exciting to see the first physical copy kind of in my hands yesterday. So I wanted to share that because obviously I cover a lot of this stuff in this book, right? So next thing, back to this particular level. If we know what the price has done, all we need to do from there is follow the liquidity, right? So by that, what I mean is this last green candle has given us kind of a mighty push down, right? Then we have a last red candle, right? So we've now set our low. Our low is taken out here, but our high was not, okay? So now we have a lower high followed by a lower low. Then we have the structure, right? We have a pullback into the range, so a range now being all the way from there, right, all the way down here. We have a pullback into the range, and then we exit the range again, which means our current range was sitting in there. Right? I'm just following the logic through. So now we have a move up, a pull back, and a move back up and through, which means this last red candle was an area of interest into the future. Right? As you can see, we kind of consolidate in a similar kind of region. However, we fail to make a new high. Right? We come back up and we test a double top, and we come on down and we break the structure. Right? So easy to follow the logic so far. Now we have the last red candle sitting in there. We ultimately come looking for the last green candle up here, right? And in theory, all we do right now, right? I know that's a bit of a skew-if line, but you get the principle. All we've done right now is we've come up and we've pinged into the liquidity that actually drove the price down from this area. So this is a key area there. Now what we do is we come down and we create another lower low. So if we were to look at all of these and put the context to this right now, we have obviously a major external structure high, right? And there's no doubt in that because that is the high, that is the all-time high, etc., etc. But where we are right now, we're actually in a kind of a bit of a confusing spot. Right? We have this low here as our current external of the range, right? But technically, this is our external high. So what we now want to look at is our internal situation, and our internal situation was powered by this last, I'll move that across, was actually powered by this last move, right? So let me put this, grab this up to the high, something like this, right? And across straight. Let me just double check on that. We're moving this one over. No, next high. There we go. Okay. So what we have right now is we have the area that caused the last break. Right? This caused the last break. This move up has yet to cause a break of the internal structure, let alone the external structure. Okay. So at the moment, what we actually have is an external move down. Right? Now, again, there's going to be different terminologies for this. This is just how I'm viewing this, how I'm seeing this. But we've actually got an internal pullback, right? So we really need to see and to understand what type of reactions on the smaller time frames we're likely to get from these areas high. Right? Now, the issue that I have with this is if we look at the overall situation, we've had a little bit of a bullish move, right? We've had a little bit of a consolidation type move down, which means we could indeed see another little move up, right? But it's whether or not this holds as to whether or not there's any intent on the bullish side, right? Because right now what we could be seeing is a lot of liquidity in my squiggle type area, right? Where we're going to see an awful lot of selling intent, and we're also going to have a lot of changing of the hands in terms of buying interest, right? So forget COT, forget all the other kind of good stuff that backs up and supports all of the logic. Just following along with this kind of liquidity play, keeping in mind the 6 principles from the Dow theory, right? We can go back and look at volume, we can go back and look at indices, and then ultimately what we want to be looking at is smaller time frame views as to ultimately why we would potentially move up and above this level, right? Whether we can sustain that level or whether we are coming back down to potentially create new lower lows, right? So this is where we're at the moment, right? I'll be doing obviously some more videos on this. If you haven't seen some of the mechanical videos I've done in the last couple of weeks, go back and watch some more of these videos on YouTube. I've actually got a playlist, which is the mechanical structure. And yeah, I will see you on the next stream. Thanks for watching, guys.